Welcome back to Help Coin, everyone. I have a question for you today that could completely alter your perspective on your entire cryptocurrency adventure. Are you truly aware of what you're holding? Furthermore, I'm not referring to simply learning the ticker symbols in your portfolio by heart. I mean, having a thorough understanding of your investment, including its foundations, use case, value, and the ground you've put your hard earned cash in. You're just planting seeds on concrete and hoping anything will grow if you don't know your soil. And that's why the majority of people in this market fail, my friends. This is the harsh reality. The majority of cryptocurrency retail investors are unaware of their true holdings. They invest a few hundred or even several $1,000s in the hopes of becoming billionaires overnight after someone on X or YouTube stated that a coin was going to moon. It's the same mentality that consistently destroys people. Do you know where it originates? It dates back to the early days of Bitcoin and XRP, when you could invest a small amount and see it increase 100 times over the course of a year. However, that was a different reality in the past. Perhaps three or four significant digital assets were present. Tens of thousands of tokens are flooding the market right now, and the most of them are merely noise. The investor of today must therefore adopt a new way of thinking. Buying and hoping is not an option. Every stance you adopt requires a compelling justification, and it's no longer optional. For decades, the major players, institutions, hedge funds, and whales have been controlling and manipulating markets. You name it. Currency, stocks, commodities, etc. They've studied human behavior and is well versed in manipulating shopping behavior. People sell poorly when they are afraid. They experience FOMO at the pinnacle when greed takes over. These guys use it and are aware of it. Just a few weeks ago, a huge liquidation event destroyed billions of dollars in a matter of minutes. Stop losses were impacted. Portfolios were evaporated, and leveraged traders were devastated. The worst part is that after losing everything, more than 2,000 people reportedly committed suicide. It's more than simply numbers. That is a human tragedy brought on by rash choices in a cruel, uncontrolled marketplace. No matter how intelligent or hopeful you are, this space doesn't care. The market will devour you if you lack a plan and don't understand why you own the things you do. I usually advise knowing your soil because of this. You wouldn't put money into a company you don't understand, would you? Therefore, there's no reason to invest in a digital asset you haven't studied. If you are unable to succinctly describe what makes your item valuable, what issue it resolves, or whose, you don't truly own the building behind it. You're merely conjecturing, and that's not how wealth is created for generations. Don't get me wrong, there is some element of guesswork. Everybody is trying to find that advantage, that asymmetric wager. However, in an environment this unstable, you must be based on facts rather than rumors. Every cycle demonstrates how the market is fueled by consumer sentiment. The knowledgeable few, who understand their land, should therefore remain composed, maintain their strength, and avoid panicking when everyone else is running after green candles. Come out on top. This is where the majority of folks fall flat. They believe that choosing the right coin is the key to investing. It isn't. It all comes down to knowing who you are and how your mind responds to the market. Everything here is driven by psychology. Whales' continued success isn't solely due to their wealth. It's because they are aware of your thought process. They are able to predict when you will panic, when you will experience FOMO, and when you will convince yourself that you have missed the opportunity. Like clockwork, they entice you to purchase tops and sell bottoms. And you're their liquidity if you don't realize that. The pattern is the same for every market cycle. Near the pinnacle, retail becomes ecstatic. Everybody is brilliant. The topic of never selling is being discussed by all. And now the same people who scoffed at cryptocurrency want to join. Then comes the severe correction. Prices can drop by 70, 80, or even 90%. At that point, panic takes hold. It's over. The same individuals who were hodling abruptly declare, crypto has died. While everyone is terrified, the smart money stealthily intervenes and buys everything at a discount. It's not a stroke of luck. It's a weapon of psychology. Now consider how this relates to XRP. People lose faith because they become so obsessed with the daily price and one red candle. Here's the reality, though. The largest sum of money in. Traders obsessed with 15-minute charts are not the ones that create this gap. It is created by investors who have the patience to wait for the fundamentals to unfold and who get the concept. XRP is more than simply a coin. It is situated at the nexus of cross-border payments, institutional adoption, and global finance. It's a long game. However, you will be burned if you treat it like a meme token. And I constantly observe that. Those who have never made an investment before hopping into cryptocurrency in the hopes of seeing results right away. They begin to approach it like a casino as they become addicted to the rush of price fluctuations. Every pump is exhilarating. Every dump is like a kick to the gut. That isn't an investment. It's gambling. Additionally, you will always end up chasing losses or selling out of fear if you let your emotions to control your decisions. The astute players, the ones that succeed, develop a justification. They do research. They keep a journal. They are aware of the linkages in markets. They are aware of how the fluctuations of XRP frequently correlate with those of the S&P, the DXY, or global liquidity patterns. They are aware of the big picture. While others panic, they maintain their composure in this way. They realize that volatility is not the end of the world. Rather, it is merely a part of the cycle. You must adopt that way of thinking. Stop observing the minute-by-minute commotion and take a step back. Zoom out. Discover how markets function collectively. Realizing the interconnectedness of stocks, bonds, commodities, and cryptocurrency alters your response. You're suddenly not a victim of volatility. You're one of its students. And that's what separates those who thrive in a naked market from others who are destroyed by one. When you begin to examine the true connections between these markets, you discover something that the majority of retail investors just ignore. Everything depends on confidence and liquidity. Debt and trust are the fundamental drivers of the stock market, bond market, and dollar index. The global system is currently transitioning from the outdated debt-based model to a digital one. Central banks are aware of it. The world's largest institutions are already getting ready for it, and governments are aware of it. They're not merely playing around with blockchain. The monetary structure is being rebuilt around it. The true story of XRP lies there. It has nothing to do with temporary price hysteria. It has to do with infrastructure. Ripple has no intention of competing with Bitcoin or Ethereum for popularity. XRP is being positioned as the global liquidity plumbing system. Take a look at the situation. CBDCs, stablecoins, digital currencies, central banks, and tokenized. All of the assets are developing. They all require a bridge asset that is neutral and capable of instantaneously transferring value across them. XRP was created with that in mind from the beginning. Scalable, effective, and regulatory focused. The irony is that, despite being the foundation of a new global financial layer, the majority of people still view it as a coin investment. That would be like to purchasing shares in the internet backbone in 1995, and then complaining that it didn't increase tenfold within a week. Generational wealth was created by those who grasped the idea and built the infrastructure. The ones that are impatient sold bits of the foundation. This shift to digital isn't just theoretical, though. It is already taking shape. Pilot CBDCs are being implemented by nations. Cross-border settlement solutions are now being tested by the BIS and IMF. In numerous jurisdictions, Ripple's name appears in collaborations, reports, and testnets. It's no accident. It demonstrates strategic positioning. The worst part is still to come. As the outdated system falters due to political unrest, debt issues, and inflation, volatility, trust in fiat money is declining. Well, we're already digital, people say. Debit cards are what we use. False. Rather than being programmable money, those are representations of fiat. A system where money is code, trackable, programmable, and interoperable is what's next. And technology,